even more banks collapse. What they're trying to do is engineer a soft landing. But the problem is that we are transitioning into a new system. So there's no such thing as a soft landing. They need a crisis. So I think we will see even more banks collapse this year.
So you're saying that your belief based on that NSA paper is that Satoshi Nakamoto was a government operative?
And possibly, in my opinion, it's a Trojan horse because you also look at the timing of when it came out, which was January
after the financial crisis, and the paper would state because of the collapse of the system, there was a need to create an alternative for the people. But you're saying that that's a decoy. Hello, I'm Michelle Mukori. Thank you for joining us. It's been a year since the March banking crisis, when we saw 3 of the 4 largest bank failures in U.S. history. Silicon Valley Bank, Signature, and First Republic held a total of $532 billion in assets. That is more than the $526 billion of assets held by all 25 banks that collapsed at the height of the global financial crisis in 2008. Now, as the banks were collapsing, the Fed swooped in with an emergency program to prop up the banking sector. But now, a year later, the safety net implemented has expired. The Federal Reserve's Bank Term Funding Program, or BFTP, was designed to protect against the looming threat of a regional banking crisis, offering an additional affordable liquidity source. So what does it mean now that this program has ended? Well, the IMF, or International Monetary Fund, is warning that we are at risk of a new financial crisis due to the banking sector's continued exposure to the crumbling commercial real estate sector. Here to give us her analysis of the exact level of risk to the banking sector, share her macro outlook on the economy and the markets, and give us her forecasts on gold and CBDCs and more is Lynette Zhang. Lynette is the founder and CEO of Zhang Enterprises and LynetteZhang.com. She has almost 60 years, I double-checked this, 60 years of experience in the financial sector, including as an investment banker with Lawson, Lehman, and American Express. And in her previous position, Lynette was the chief market analyst at ITM Trading. Lynette, welcome back to Kitco. Always good to have you, and big congratulations on the new venture.
Thank you so much, Michelle. I'm always happy to be here. You're one of my favorites, so this is great.
Admiration is mutual, and we'll hear more about LynetteZhang.com towards the end of this interview. But let's pick up where we left last time. And last time we chatted was as the banking crisis was unfolding, and you had been very wary of banking collapses leading to consolidation in the banking sector, making it easier for a reset, which in turn could facilitate a CBDC, central bank digital currency. And you mentioned how all of this ties in with the ticking debt time bomb and the inevitability of the dollar reaching the end of its currency life cycle. All right, before we get into the bigger picture here, I want you to help our viewers understand where we are with the banking system right now, because we had this Bank Term Funding Program expired. Now, that offered banks and credit unions a lifeline, enabling them to secure loans during the collapse. Before its expiration, the Fed said that nearly $170 billion had been distributed through this initiative. So what are the implications now that this BFTP has expired?
Well, I always think that it's interesting because you have to look at all of the programs that are in place. The one that they've just canceled was pretty obvious that it was set up for the banks to make free money and create an arbitrage circumstance where they could go into that program, borrow at lower interest rates, and then take that same money and invest it in treasuries at a higher interest rate. And that's basically making free money. So once that was discovered, they couldn't extend the life of this program. They had to shut it off because that's exactly what they did in 2008 when they decided to, for the first time, pay banks interest on reserve assets. So, but there are so many different ways and so many different tools that they have to create that. I don't really want to call it liquidity because it's just money printing, right? And giving it to the banks to support them. Yes, every bank, including every central bank, is deeply underwater. It's like all we see is the very tip of that iceberg, but the danger lies in what we do not see. And that's held really privately underneath that water. So it's all about interest rates, right? And what I find really interesting is that all of this money printing and all of this money creation has essentially, I mean, there's no value in the currencies anymore. So that's not a new thing. And it's not just the US dollar going away, it's actually the entire financial system that has to reset into that new system. So taking away any stigmas of bank borrowing, but they are all insolvent, every single one. And it's really simple. Actually, I have it right here with my sterling silver chopstick. This is the principal value of the bonds. These are the interest rates. So for 15 years, they held the interest rates at zero. So any of the bonds or debt, so mortgages, auto loans, student loans, credit card loans, any of the debt was inflated. Its valuation was inflated. Then once that has reversed, so 22 and beyond, we'll look at the principal value of all of that debt now. If they are forced to sell because of a lot of withdrawals from the banking sector, as you were talking about, we saw those regional banks collapse. There have been a number of regional banks that have collapsed since then. NYCB, that was just bought by Steve Mnuchin, one of the benefactors and the consolidators from that crisis back in March. And that's private money, right? He came in.
Yeah.
We've been talking quite a bit about the private money, and he came in and bought that bank. I'm talking about buying talk.
Definitely want to get into the role of private equity and Steve Mnuchin, former Treasury Secretary, stepping in there. And you mentioned that, okay, this one program ends, but behind the scenes, they're just working on another program. But it just looks good to say that the BFTP program has expired. It's done what it needs to do, and that they're trying to remove the stigma from the discount window, encouraging banks to borrow from that. But you said right now that all of the banks are insolvent? Surely not all of the banks are insolvent.
Every single, because what have the central banks been doing, right? They've been buying up all of this government debt with interest rates at zero or even negative. So now that the interest rates are pushed up to quote unquote fight the inflation, all of the valuation of all of that debt is way underwater. So in commercial real estate, it's not just commercial real estate. Certainly, we're watching a lot more buildings being given back to the lenders. But if the valuations of all of the banks, including the central banks, are based on debt, which they are because the entire system is based on debt. This is a debt-based system. Those interest rates have pushed down the market valuations of all of that debt, not just bonds, not just mortgages, but it's also auto loans, student loans, credit cards, and then all of the mountains, trillions and trillions and quadrillions of derivative bets against that debt or against that credit quality. So yes, every single central bank, every single commercial bank, community banks typically do not take those kinds of risks, but they're sitting with all of that commercial real estate, other real estate that is at nosebleed level, multifamily, single family. All of that debt is underwater, all of it.
I know it's always important to be on the lookout for scams. That is why I pay with Revolut. If Revolut detects anything suspicious with your transfer, you'll receive an in-app warning straight away. Create your account today for free and discover how Revolut keeps your money safe and secure.
Want a faster route to saving up a deposit? A Moneybox Lifetime ISA can get you there much quicker. With a 25% government bonus worth up to £1,000 every year and interest on your money too, your first home could be closer than you think. Start saving for your first home with just £1 using Moneybox.
In the context of interest rates rising and in the context of the $34+ trillion worth of US debt, is that how you use the framework to say every single bank is insolvent?
Well, yeah, but it's not just in the US. Every central bank has been supporting their government spending by buying the debt. That used to not be the case, right? With the US as the world reserve currency created an artificial market for US debt and US dollars. But the reality is it was a coordinated, synchronized methodology, dropping interest rates to zero after the financial crisis or as the financial crisis was unfolding in 2008. Well, all of that debt, it is really pretty simple. All of that debt, if this is the interest rate and this is the market value of the bond when it's issued, right? So if interest rates go down, the market value of the bond goes up. If interest rates go up, the market value of the bond goes down. And on a global basis, you basically had all central banks following that same game plan, whether they went negative, whether it wasn't quite at zero.
Right.
But now we're watching as they're raising the interest rates, it's the market value. So if they're forced to sell, like we saw with Silicon Valley Bank, et cetera, that's when you discover it. Because like Bank of America said recently as well, we're just going to hold them to maturity and then they will mature at par and we'll get our money back. So that's okay. Well, it is as long as you're not forced to liquidate.
Right. So
right.
Mark to market, that's when you have a problem if you're forced to liquidate with interest rates where they are. Just wanted clarity for our viewers there, Lynette. So look, given where we are with this scenario, last time you were very concerned about consolidation of the banking sector, keeping in mind that over the last 20 years, the US has lost about half of its banks. Most of these are smaller players that got absorbed by the larger institutions. Last year, as we discussed, we had the largest bank failures since the 2008 financial crisis. Silicon Valley Bank, Signature, First Republic held a total of $532 billion in assets, more than all of the assets held by the 25 banks that collapsed in 2008. Already, the top 5 banks constitute over 57% of total bank assets. So what are your expectations with regards to further consolidation in the banking sector this year?
Well, this year, I believe we will definitely see even more banks collapse. What they're trying to do is engineer a soft landing. But the problem is that we are transitioning into a new system. So there's no such thing as a soft landing. They need a crisis. So I think we will see even more banks collapse this year. The smaller ones, and then they will be absorbed by the larger ones, though I think it's going to be interesting to see what private equity does with these opportunities. Because you should never let a crisis go to waste.
Well, you mentioned former Treasury Secretary Steve Mnuchin, and he swooped in to help with the regards to New York Community Bank. He got a group to put together, $1 billion worth of investment, and he came to the rescue there. What do you make of that move? What do you see the role of private equity now in this banking sector starting to fall apart?
It's really kind of interesting because private equity was just very tiny prior to the crisis. But once they had access to all of that free money, you can look at the graphs on the growth of private equity, and that's huge. And so definitely inside of the banking sector, we're seeing it. And hey, Steve Mnuchin did that the last time during the banking crisis with IndyMac, which had a ton of mortgages, and they changed the name, but they were known as the foreclosure king, which he does not like that title, but that is what happened, not even giving people the opportunity. I think that this is significant because, again, now he's talking about buying TikTok. So private equity means a greater shift of those assets into the few hands, into that 1% or the 1% of the 1% hands. And isn't it supposed to be that, according to the World Economic Forum, we own nothing and we're going to have to rent everything from these private players? So between your big tech companies that know everything about us, right? And whether it's the private players or the tech companies, I mean, this is an awful lot of power concentrated in just a few entities. What kind of control? I mean, to be perfectly honest with you, when you look at the revenues that these entities can generate, private equity doesn't have to report as much as the other entities do. But when you're looking at the power that they wield and the assets that they're buying up, it gives us a lesson, actually, because they have the ability to do that because they have the ability to gather cash. That's what gold does for an individual. It enables you to hold your purchasing power so that when those income producing assets that are currently at nosebleed levels, when those collapse, and we are looking at a real estate collapse, and not just commercial real estate, but we're also looking at it in multifamily real estate, and we're looking at it on a global basis, and even the price levels of the single family homes that, I mean, the younger people have discovered the American dream doesn't really exist. Real estate is a key asset for most on a global basis. So again, this is a global issue, and we're watching the real estate market implode in other parts of the world and coming to a theater near you. We're going to see that in this country too.
So it's fascinating how you're emphasizing this wealth transfer, essentially.
Oh,
you know, World Economic Forum says you and I will owe nothing and be happy, whilst they're advocating for this renters economy. But you've got to rent from someone, right? So if
exactly.
You go ahead.
Well, and I was going to say, what all of this technology enables is tokenization or assets to be turned into tokens of everything, anything that's tangible, including a glass, including the clothes that you're wearing, absolutely everything. And then what do? You hold all of this on your phone, and how easy is it to spend? Because basically the whole world has become consumer driven, because there's really, who else is going to support it? All that wealth has already transferred. Now the key piece here, and what I pay attention to very closely, is the risk transfer. Because once they have made enough risk transfer from the few to the public, to the many, then you will see that maintaining and propping up this system has just gotten too expensive. And all of a sudden, that's when you'll see the stock market crash, the real estate market crash, the derivatives market. That's the one that continues to scare me, because we don't even know the value at risk. And every single key player, the Bank for International Settlements, the IMF, in this country, the FDIC, the Fed, I don't care what entity, the World Bank, every single one of them tell you that the market value of these contracts, nobody has the true understanding of the true value at risk. That's the one that, when there is an obvious explosion there, because remember, that's under the surface, we can't see it. That's an opaque market. That's the one that scares me the most, because that will easily overwhelm the central bank's ability to print their way out of it. And not only that, it's that confidence piece, that there's just one little layer of confidence left, and that's the public confidence. And that is eroding really, really quickly, and has eroded in other countries, just not quite in the US yet.
Right. Every time you bring up that money printer, I smile. It amuses me because it's actually costing you more to do that than it does a central bank to go click, click, click. We don't even have paper money anymore, right? For the most part. Now, Lynette, you mentioned tokenization. Larry Fink of BlackRock, very big proponent of tokenization, seeing it as definitely the biggest trend in the future. But I want to bring it back. I want to bring it back to the banks, right? And
Yes.
we're seeing, on the one hand, if private equity steps in and saves these banks, you talked about public trust. Does that then sort of negate the crisis, right? It saves regulators from having to do this in a way. Perhaps it even saves individuals from being bailed into the bank. Does private equity, although that has obviously detrimental long-term impacts in that, as we discussed, more assets consolidated in fewer hands, does it prevent or delay the banking implosion?
It could. I mean, that's a really good point, Michelle. It certainly could postpone it, but it won't postpone it for that long because they are also, and they know this. So if they're balanced with gold, but if they're not balanced properly with gold, they're still getting all of these underwater assets, but they're buying them when they're underwater, right? So the current banks that are holding them, they're the ones that are underwater. When Steve Mnuchin came in and bailed out that bank, he was paying this much for those bonds, not at market value. And it makes it even more dangerous. So it could certainly postpone it.
Kick the can down the road, because that's the thing. We have a lot of experts come on and everything that they say makes sense, right? But we also have guests that say what is inevitable is not necessarily imminent. And I get that currency life cycles run out, and I get that the fiat hoax has to eventually end and eventually things will blow up. But many would say we've been expecting this 2008, 2010, and we just get this can kicked down and down and down the road. And again, I'm certainly not rooting for it to happen anytime soon. But if it's just yet another stopgap measure in the sense that you've got private equity now to come and save the day and tokenization as a new way to delay the problem, what does this mean for this original timeline that you had of, I think you said last time we spoke that you expected an implosion within 2 years. Does this change that?
Not by much. I think that we could definitely see it because, first of all, private equity, even though they can influence those that print the money, they can't print the money. So those assets, if interest rate, okay, this is what I think is going to happen. Okay. So we've got all these underwater assets and we have this huge mountain of debt that is resetting this year, next year, and the following year. Huge. At the higher interest rates, forcing the global central banks, and this is happening now too. You hear everybody talking about global central banks, different ones discussing when they can lower rates. And even our Fed saying, well, it's not quite time yet, but maybe sometime this year. So it's going to force, this looming mountain of debt is going to force a Fed pivot. Now, when the Fed pivots and they drop those rates, that will increase the current market value of the bonds. So for a second, that can look okay, but that's also inflationary. And much as the global central banks, different central banks are wanting to lower those rates to stimulate their economies, because that worked so well for 15 years, didn't it? That higher inflation erodes confidence. When the public can see it, it's going to be the public that ultimately, it'll either be the public or it will be this next big crisis that is not bail-outable, that will make it obvious to the public. But there's only one layer of confidence left in here, and that's public confidence in this printing press, in that the central banks know what they're doing. Rapid inflation erodes that confidence. And there's really no valuations left because officially, if we're at 3 cents left on a currency, like that's the official number of the value of the dollar. Well, if it goes to zero, but people continue to use it, and then it goes to negative rates, and they experimented with that since 2009. Japan just came out of negative rates. So what does that exactly mean? It means you're going to watch your principal be eroded in this banking sector. If you're putting your wealth in there, you're putting money in there, and you're trying to save.
Right.
When you go to the digital currency, the CBDC particularly, there's no place to hide other than gold and silver. There's no place to hide.
Before we get into central bank digital currencies and the reset that you think this leads to, let's focus on inflation. So now you've just said that we have 3 cents worth in the dollar. That is the purchasing power left of the dollar. Break that down for us.
I've been in finance since 1980.
I do like investments.
I invest in businesses quite a lot.
We first considered investing in gold when we were still very concerned about the global economy, Europe in particular.
I mean, clearly we're living in a time of unprecedented uncertainty.
My criteria for looking for a gold brokerage was good market positioning, who also allowed me to invest through my SIP.
I was looking above all with somebody I could trust.
The market was full of transactional websites that really lacked that consultative approach.
The other bullion dealers didn't want to engage with offering any help.
The Pure Gold Company is an investment company that specialise in physical gold and silver, both coins and bars.
They were very consultative in their style with me.
I made Josh jump through a large number of hoops. He managed to address all concerns, and I was totally satisfied.
Well, you know, the original dollar, and you can see the basket of food that dollar used to buy, right? Today, when you go to the grocery store with $1, are you actually even is there anything in the grocery store that's $1?
No, they've had to recently shut down the dollar stores. You know, I think about 100 dollar stores have had to shut down. At Lynette the other day, I was commenting, you used to get a dollar pizza slice. It's $1.50 now or $1.25. Can't even get a dollar pizza slice. There were places in New York, $1, one slice of pizza. But go on.
Well, but that is the point, because people are noticing that. If they can have that loss happen slowly, like they have 2%, right? That's where you have that 2% target. People don't notice it, and therefore they do not change behavior. For central banks, that's what they refer to as price stability. Not that the price stays stable or the same, but that the public does not change their spending behavior. However, when inflation happens rapidly and you notice that dollar slice of pizza is now $2.50, and that happens, if it happens over a long period of time, you kind of adjust to it. But if it happens in a short period of time, which is what's been happening, well, then you notice it and you go, I don't trust this anymore. And we've been watching confidence, the public confidence, erode over time enough that there's just not that much confidence. And once you lose that confidence,
Right.
They use gold. Look at Zimbabwe. They use gold to try and get that confidence back.
Right.
People have confidence in the physical, but their gold-backed CBDC, they're having trouble getting adoption because you cannot convert that CBDC into the hard asset, into gold itself.
Right. I mean, and that's the whole, illusion of fiat currencies, because they're essentially not backed by anything ever since we've been taken off the gold standard. And as you said, the US dollar backed by the full faith of the US government, but people are starting to lose faith in the US government as they're seeing fiscal and monetary mismanagement with a national debt of over $34.5 trillion as we speak. And then the Biden administration wanting to increase that by what? Another $7.3 trillion, unveiling an election year budget of $7.3 trillion on top of that $34.5 trillion of US national debt. You were mentioning that we're seeing a trend in the monetary velocity chart spiking.
Yeah.
for the US dollar, and that is very problematic. Now, the monetary velocity chart for our viewers, that is the ratio of nominal GDP to a measure of the money supply, M1 or M2. And it can be thought of as the rate of turnover in the money supply, the number of times $1 is used to purchase final goods and services included in GDP. Help us understand what you're seeing and what this means.
Okay. Well, the monetary velocity, basically, if you take on debt, and that can be stimulating, but that monetary, the number of times that the money changed hands, let me make it simple. Let's say I had a good week and I've been needing a new car. So I have the confidence to go out and buy that new car because my income's pretty steady and I feel like, okay, it's going to stay that way. So I go and buy that new car. Now, whoever sold me that car, that salesperson made a commission. And maybe there was they wanted to take their husband on a weekend vacation somewhere. But now, since that money changed from my hands to their hands, they feel confident in doing it and they go on vacation and they're feeling kind of flush. So they go to a restaurant, they leave a large tip, and now that wait person can maybe buy the sneakers that Johnny needs, right? So the number of times that money changes hands, that's key in knowing and this is my opinion, so I have to say that, but it's key in knowing when hyperinflation has begun before you feel it. Because every time you talk to somebody that has lived through it, they say that they didn't know anything. Everything seemed okay. And then boom, all of a sudden they were enveloped in this hyperinflation. So what people do when they see that hyperinflation, the value of their money going down very, very rapidly, they will convert it into anything that they feel will hold value better. Look at China. I've been a China watcher for so long because I felt that their government, their regime was showing us, first of all, how to control a population. But when they took it too far and they squeezed the public too much, the public revolted. In a completely controlled society, that's pretty amazing to see. And it's also very telling. What's happening now? There is a gold rush in China. Now, you might remember that it was 2006 when the Chinese government allowed their population to buy gold again through the banks and hold that gold in accounts at the banks, which would make it very easy to confiscate whatever gold is held in the banks. But the Chinese public that have been trying to build their wealth in real estate, that's probably the key asset that they hold, but in their stocks and their bond market and in their private shadow bank market, I mean, they've been watching their wealth implode and now they're rushing to the safety of gold. And the beauty part about gold or silver or any of that, regardless of its form, it is monetary at its base. So this gives me hope for our future because we're watching a society that is so suppressed break out of that mold and then try and do things that will protect their wealth because they know now the truth about the fiat system, as you pointed out.
All right, a lot to unpack there. Lynette, I will say, though, that the people of China is one thing, but the government of China, the People's Bank of China, China's central bank, leading in terms of gold purchases, but also was the global leader in terms of pushing forward a central bank digital currency, the digital yuan, and linking it to a social credit system and linking it to a digital ID. They've sort of laid the framework for the nightmare scenario that we're all dreading with the prospect of a CBDC. Before we get to CBDCs, though, I do want to just circle back on this monetary velocity thing. And you used the term hyperinflation. Mm-hmm. That's inflation at an increase of over 50%. I mean, you're seeing that in the United States. Granted, I see the chart spiking. I see the dollars on staying in the same hands. I get your point. I don't even hang on to the same dollar for a day because I use it to buy something else, which shows the depreciating value of the dollar and the need for physical assets.
And it shows how uncomfortable you are, right?
But
it shows that
hyperinflation, Lynette?
Well, the only difference, well, I'm not saying that the US is in hyperinflation now. What I'm saying that for me, that monetary velocity spike, since it is in a very pervasive way, that indicates the beginning of a hyperinflationary event.
Mm-hmm.
And how do you go bankrupt? I think it was Ernest Hemingway that said slowly at first and then quickly.
Yeah.
And hyperinflation is the same way. When you read the documentation of people that have lived through hyperinflationary events, and I'm not talking about necessarily historically, that's true historically, but even currently, because there are a number of countries around the world that are experiencing that right now, they all say the same thing, that nobody saw it coming. Well, you didn't see it coming because you weren't looking. And what the monetary velocity chart does, it's an indication of that loss of confidence, of that conversion and buying things with those dollars when you get them, which is what I do too. I don't want to hold on to, you need to keep a certain amount of dollars because that's still our current tool of barter.
Right.
But I don't hold more of them than I need. And I only hold as much of them as I don't care if I can't use them, if they lose all value.
Right.
Because I have gold and I have silver to balance that out and recoup those losses and put me in a position like Steve Mnuchin is to take advantage of this crisis because I hold my purchasing power.
Right. And Lynette, that's why we're arguably seeing the equity markets hitting these levels, because people feel like the value of holding dollars in their bank account is losing their money. It's not doing anything. And so it's not necessarily that the economy is doing well, even though stock markets are hitting new all-time highs. The fundamentals of those companies certainly don't match. The price to earnings ratios are completely out of whack. But people, including myself, don't want to sit in cash, put it into equities, put it into gold, put into Bitcoin or cryptocurrencies. I know we have different opinions on that one. But clearly, I get the point that people are not feeling comfortable with holding money. And that is illustrated by the money velocity chart as a very clear indication of that. Let's bring it back to central bank digital currencies, because you were one of the very first to sound the alarm about this way back when this first started. You were also one of the first to highlight the global trend of de-dollarization, meaning other countries moving away from the dollar as a reserve asset, opting to trade in their own currencies as opposed to the dollar, and the general bifurcation of the global monetary system. Also one of the early ones to flag that trend. In terms of CBDCs, do you still see this banking consolidation, this implosion, as paving the way to a CBDC here in the United States, even though we have people trying to assure us otherwise?
100%. Yes, 100%. And the reason is because you can see the patterns every single time. And there's so much data on this, but the patterns of how you make this transition into a new system. And you need a crisis that's large enough to scare the people enough to comply and just to volunteer. And if you're not prepared, well, what's going to happen is there's going to be this huge crisis. They're going to give us all a whole bunch of CBDCs to go out and spend. And, even though Fed Chair Powell says, we're not even close to it, blah, 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 they're running tests. So here's the thing. Their job is to lie.
You mentioned Fed Chair Powell, and we do actually have the soundbite from him. He has spoken previously saying that it would require congressional approval. He's made those comments in the past, but more recently, he was speaking before the Senate Committee on Banking, Housing, and Urban Affairs, and he stressed that the U.S. is nowhere near recommending or adopting a CBDC in any form, and we'll play that soundbite for our viewers now.
First of all, I want to say that we're nowhere near recommending or let alone adopting a central bank digital currency in any form. But the idea is that as technology has evolved, money has become digital. So, but the government doesn't issue digital money. It's digital. If you look at your bank account, people don't hold those physical dollars. They're digital. So the thought was that the government could create a digital form of money that people could then transfer among themselves. Now, of course, that raises a concern that if that were a government account, that the government would see all your transactions, and that's just something we would not stand for or do or propose here in the United States. That is how it works in China, for example. But that's not what if we were to ever to do something like this, and we're a very long way from even thinking about it, we would do this through the banking system. The last thing we would want, the Federal Reserve would want, would be to have individual accounts for all Americans, or any Americans for that matter. Only banks have accounts at the Fed. And that's the way we're going to keep it.
So, Lynette, what sort of sticks out to me is we will do this through the banking system, right? And that sort of links into the FedNow system, which was already implemented, which kind of lays the groundwork for a central bank digital currency through the banking system. What do you make of what we heard from Fed Chair Powell?
I think that a large enough crisis would justify anything they want, and Congress would pass it. I mean, but again, their job is to keep us calm and keep us in the system. It's called perception management. And that is an official term. That's not my term. That's an official term. And to be perfectly honest with you, I know that there are tests that are being run, and I don't frankly believe him, because his job is to keep us calm and keep us in the system. If we really thought that there was going to be a banking crisis, are you keeping your money in the bank? No, you're going to go pull it out. And then that just exacerbates their problem, because there is not enough. There's barely anything in the FDIC DIF fund. So I think they're much further along than they want us to believe with a central bank digital currency. I think the bank, I mean, you look at, we're the largest economy, and then China's the second largest economy. If you look at the Bank for International Settlements, which is the central bank, and you look at their monetary flower, then you see that they use they mention both wholesale and retail CBDCs inside of that. So he's just saying it, and time is going to tell whether or not he's telling the truth, or they're going to find some kind of justification for all of a sudden, well, look we've got this ready. And I think what's going to happen, I think it's just going to be sprung on us. The question is not, will they do this, and is that it? Because it won't be it. When they first bring this CBDC out, it will not be the end of it. It'll just be another tool in the transfer. Because what the central banks talk about is that it eliminates it eliminates the need to keep interest rates in a positive territory. These are their words. Once we have a CBDC, there are no limitations to how low we can push interest rates, which really means eat your principal, because they've already gotten all the purchasing power out of it. So maybe he's telling the truth, but that's not his job. His job is to keep us calm and protect the banks. So to do it through the banks doesn't make it any better, because that was an issue that they had to resolve. They had one directly with the public. Then what happens to the banking system? And the banking system is their mechanism to distribute their policy.
Well, we know that there has been an executive order issued by the Biden administration to explore a central bank digital currency. It's a mandate. Tom Emmer, the chief Republican whip, he agrees with you. He says, if you don't think the Fed is pursuing a CBDC, think again. Tweeting about that, and also showing a document that was shared with his team showing that a CBDC is one of the 7 key duties of the Fed that was distributed to members of Congress. And, Lynette, we've certainly seen this tremendous growth in the number of countries actively pursuing a CBDC. Yes. According to the latest data from the Atlantic Council, 134 countries representing 98% of global GDP are exploring a CBDC. Just 4 years ago, that number was only 35. It's a dramatic increase. Now, you mentioned this idea of negative interest rates. One of the so-called proponents or positive, depending on your viewpoint, of CBDCs is that they say it allows you to fine-tune monetary policy, meaning it's programmable, so it could just be sort of sucked out of the system at once, and it sort of eliminates the need for interest rates. We are getting reassurances, though, from at least Republicans, that this is against and contrary to the ethos of America and the American people. And people say that this is like political cyanide. Any sort of politician coming out in support of this openly, for people that understand what it is obviously not going to be viewed very favorably. But you're saying that that obstacle sort of gets eliminated through a crisis, or through, how does that get addressed?
Well, go back to 2008. That wasn't that long ago. And the whole country went up in arms with that $800 billion bailout. But Congress did it anyway, didn't they? Because the crisis justified that behavior. Now, if the next time and I was there in 1987 on Black Monday, so I know what a stock market implosion looks like and feels like and tastes like, because I was a new stockbroker when that happened. And that justifies a big enough crisis that scares enough people, justifies all of a sudden giving people, well, look what happened during, the Cerveza crisis, amazingly 4 years ago now, right? And all the money that they pumped into the public hands to spend, that's going to enable the entrance of a US CBDC. But it's got to be a big enough crisis. And so it's got to be obvious. It's got to have impact, immediate impact. And then you'll see how fast Congress will change tunes, and all of a sudden the US CBDC will be given to everybody. And I do want to say that in a number of those countries that have been experimenting with the CBDCs, they're not necessarily getting public buy-in. Now, China is an exception to that, but Nigeria is a country that tried to issue the CBDCs, but they didn't get the public, but 5% of the public to participate. So they created crisis in order to get higher participation. Don't buy it, right? But if all you have is inside the system and the system implodes and you lose your income and you lose your wealth, and they give you these CBDCs for free, you're going to go out and spend them. The question is, will you get any new money that you get? Will you put it back into the CBDC? Will you adopt it? If you don't have food, water, energy security, barterability, wealth preservation, community, which is arguably the most important piece anymore, and shelter, you're not going to have choices, because you're going to be beholden to whatever they want you to do. And that fine-tuning, they said it. We can have a finger on the economic button 24/7. So they want you to spend. We're it's the consumers that are being tasked with supporting all of this garbage that they've created, because we've been witnessing this consistent and steady risk transfer from the few to the many, from the old hands that used to buy treasury bonds to the new hands, the mutual funds and the individuals. This is hot money. So when enough risk has been transferred to the public, I'm telling you, you'll see it. That's when it will become too expensive to support this game, but they are working voraciously at getting those CBDCs everywhere in the world, even though the public in many places has spoken and do not want them. They will cram it down our throats. And unless you have something that is truly outside of the system, what choices will you have? None. You're going to have to do, there's your social scoring. You're going to have to do what they want you to do.
And those things outside of the system, you're saying, are gold and silver.
Well, they're the only ones that are undervalued, right? And severely undervalued, because this is real money. And so is gold. I mean, so is silver. This is all real money. And they want you to believe in their fake money. But, I have a $100 trillion Zimbabwe note here. Yep. No, 10 trillion. $10 trillion Zimbabwe note.
What's 90 trillion between friends, Lynette?
I mean, it's nothing. And actually, 10 trillion or 100 trillion times zero?
Yeah, exactly.
Zero. Doesn't matter.
Yeah.
And you can't buy 3 eggs with this.
So this crisis, again, is this a financial crisis, or do you think it's a geopolitical crisis that leads to a financial crisis, as we see so many potential geopolitical flashpoints around the globe? What do you think this crisis is that takes us there?
I think the true crisis is the financial crisis, and the geopolitical aspect of it, so wars, etc., and also energy issues, women's rights issues, civil rights issues, inflation, the higher inflation. All of these are indicative of a system reset. So it distracts you. You get enough chaos going around over here. You're looking here or you're looking there, and it divides us, right? I've done enough traveling to know that basically everybody wants the same thing. They want a safe place to live. They want to be able to, do their work and find joy and happiness and be able to raise their children, etc. They want a calm life. But all of this geopolitical activity is divisionary, right? So now we have enemies that we can point fingers to and we're not pointing fingers out where it really matters, which is the central banks and their money printing, and the government and their money spending, because it's not them that has to make that money. It's us, the people, that are paying with our purchasing power and with our wealth.
Yeah, divide and conquer, as they say.
Exactly.
Lynette, what do you say to those, and I know you disagree with this, but what do you say to those that say gold, yes, silver, yes, but another way to potentially opt out of the system, Bitcoin, or maybe other cryptocurrencies?
Okay. Now, we need to be really frank about this, because I've studied currency life cycles forever, and they need things normal. So my personal belief, especially after reading the 1996 NSA, which is a government agency white paper on how to create a mint, is that Bitcoin was the Trojan horse. And I don't think it was a coincidence that it came out in January of 2009 and quantitative easing started in March, because they need to have things look as normal as possible so that you don't know that anything has changed, when in reality, everything has changed. Now, going back to the Bank for International Settlements money flower, there is a very small place for private cryptocurrencies that do not travel or under the purview of central banks. There's a much larger space for commodity money, so gold and silver. So there will be some private ones that survive. But the visibility that Bitcoin has gotten in its first run up to 70,000 and inside the ETFs, people that buy gold and people that buy cryptocurrencies have the same kind of, typically, unless they're trading, have the same kind of concerns and mentality. In other words, they're trying to do something that's outside of the system. Michelle, do you really think that Bitcoin is outside of the system now?
Look, I have raised this as a personal point of concern that bringing Bitcoin ETFs does bring Bitcoin back into the traditional financial system, which it was supposed to be an alternative to. I personally have raised this as being contrary to the decentralized, independent ethos of Bitcoin, which, as you say, appeals to the same libertarian mentality that sees the debasement and devaluation of fiat currency and wants to find an alternative. So I do flag that as a big concern that, yes, it's good for the price and it's maybe good for adoption, but it's not so good if you're looking for Bitcoin to be an alternative to the system. But you're saying that Bitcoin, in your opinion, and I'm assuming that this is speculation, was designed in order to normalize the idea of digital currencies for people, bring it into the private sector, create adoption to lay the groundwork for a central bank digital currency.
Yes, that is my very strong opinion. Having read enough of the documentation and knowing that they know how to make this transition. And I was there in 1971. And my parents were really bright, and my aunts and uncles were really bright. When they completely took us off the gold standard, nothing's going to change. If you buy U.S. made, American made products, you're not going to be impacted by this inflation. Don't worry. This is just temporary. And here we are, how many years later? Not so temporary.
Well, Lynette,
so
what specifically in what you've read is leading you to believe this? Do you have, because you're very meticulously well researched.
The NSA white paper, anybody can get it. I believe it was 1996 on how to create a mint. And if you read that white paper, so much in there looks so much like cryptocurrencies.
Does that, though, necessarily mean, just to play devil's advocate here, because we don't know the identity of Satoshi Nakamoto, the creator of Bitcoin, and what you're saying has been floated that maybe he was part of, the NSA. So you're saying that your belief based on that NSA paper is that Satoshi Nakamoto was a government operative?
And possibly, in my opinion, it's a Trojan horse because you also look at the timing of when it came out, which was January
after the financial crisis, and the paper would state because of the collapse of the system, there was a need to create an alternative for the people. But you're saying that that's a decoy.
Oh, I do believe it's a decoy. Yes, absolutely. Because we've also had enough occurrences of currencies resetting into different systems. And what they say is we have to keep it looking as normal as possible. So yeah, they needed to develop these cryptocurrencies, get them out there, let them run, right? Get them visible to the public. All right, well, what's the difference between a cryptocurrency or a CBDC? Or to the point of Powell, when you look at your statement, the money that's digital, right? It's about normalcy. They've been moving us in this direction since the 50s. This isn't something that they do overnight, because if they do things overnight, you see that, you notice it, we're going to protect yourself. If it happens over a period of time, and it's genius. How much money would have gone into physical gold had Bitcoin not been there? And I've been watching it since it was $7 a coin. And I'd also point out on the cryptocurrencies, what color are all of those imaginary coins? Well, they're gold or they're platinum.
Well, for the most part, I'm going to attempt to stay neutral on this one, Lynette, but I think it would be fascinating if we could get you back in on a panel to discuss your theory that Bitcoin is in fact a Trojan horse for CBDCs. I think our viewers would be very interested in having you hash that out with someone that's on the other team. And in order to moderate that conversation, I'm going to attempt to stay neutral right now, but I do think you make some very interesting points Certainly when you bring in the idea that you got money flowing into Bitcoin rather than into gold, and while central banks are the ones accumulating gold. Though we have had people on the show that believe that central banks are also secretly buying Bitcoin, other than El Salvador, and it's a matter of time before that becomes publicly known. But I hope I can lure you back in to have a panel / debate discussion with someone to take the other view, because I think that would be very fascinating, a conversation, and we'll break it down into detail there. So, but very quickly though, if you see the system collapsing, you see gold as an alternative, silver as an alternative, does that mean that you see Bitcoin being banned or still functioning as an alternative?
I think it can function, but it's not money, right? It doesn't function as an alternative to a tool of barter. So for those that were seeking that, I get the functionality is you can carry a lot of wealth in a small little thumb drive that you can put in your pocket and take anywhere. And I think that has value, but the cost of mining, the cost of creating any of these cryptocurrencies with the energy and the water and all of that is pretty darn dear. And what else can you do with it? So even though that's the direction that we're going in, personally, I'm waiting until I see who is going to survive, because nobody knows that yet. Who are those private cryptocurrencies that are held in the money flower? I don't know.
Well, again,
then
people would differentiate between Bitcoin and the other cryptocurrencies, certainly the Bitcoin maxis will. But again, we will leave that and would say that Bitcoin is a unit of account and a form of currency in the future. But I'm going to leave that for our superstar panel when we have that conversation. By the same token, though, if we do have the CBDC and this reset, why are you so confident that gold wouldn't be made illegal, seeing as it has been made illegal in the past?
Oh, that's a great question. That's why I only do collectibles, to be honest with you, because of course governments can change rules and they can take anything that they want, but it's much easier. Most people will buy bullion, which is new, and it doesn't matter whether it's from a different country or not. Whereas with the collectibles, they're in a category that the elite live in. I mean, you can have a coin like this. This is not that expensive, but you could have a coin, 1 ounce gold coin, $15 million, $20 million. Well, who can afford that? But either the people that write the laws, or they would have the ability to influence those. So I do personally believe that we will see an overt gold confiscation. Price manipulation is certainly a form of confiscation. And we are watching countries around the world confiscate gold from mines, et cetera, but they're not going to call it confiscation. They're going to raise taxes, tariffs, this, that. I mean, there's all different names, but the bottom line is when you are hidden, or when the truth is hidden from you, rather, and so you cannot make an educated choice that actually puts your best interest first, because everything you're looking at is manipulated. That to me is also a form of confiscation. So yes, Michelle, I do think that in this country, like we're seeing in other parts of the world, gold will be confiscated again. And so the form in which you buy it actually matters. And if you look at what's happening in China, they go to the banks, they can buy coins, but they're going to jewelry stores and they're buying lots and lots of jewelry. And the younger people are buying these little beads because, gold and is so malleable that you can have a very light piece of gold. It can be in a very thin form. And then in terms of the fiat currency can be lower. So,
but on the collectible side, you're saying that you don't think that they would change the law regarding collectible gold because too many of the elite benefit from the collectible exemption.
Exactly. Who writes the laws? Treasury Secretary Wooden wrote it in 1933 because he knew what they were doing to debase the currency, the fiat dollar, and convert it, ultimately into debt-based. It wasn't pure debt-based at that time. But after the U.S. got all the gold they thought they were going to get, they revalued. They did that overnight revaluation. He didn't want to give up his gold. Not only that, but he wanted to have the ability to continue to accumulate gold during that period of time when the general public didn't know that if you did it this way, you could still accumulate and hold gold.
Don't worry, I got you on this.
You need a lifetime ISA. It's the fastest way to grow your deposit.
So, yeah, the elites write laws. They're going to write them in their best interest. And with bullion, you can do the eminent domain laws, right? So they can take anything, but they're going to say, okay, we're going to pay you X for it and put in a premium so people think, oh, what a deal, right? And they don't fight you and they don't argue with you. But on these coins, it's less than 2% of all the gold that exists. We know that's a finite amount, and they would have to look at each individual coin to determine its fair value. It's not worth it. It's not worth it. So they write the laws to benefit themselves. And then that's where I want to have my wealth.
All right, Lynette, as we wrap up, here are some very sobering opinions and thoughts that you've shared with us. But give us your final thoughts and tell us more about LynetteZang.com.
Okay. I really think my final thoughts, I was fortunate enough to be able to go and do some events in Australia last August, September, and it really changed my life. So what I've really realized is that while we do need to be as independent and self-sufficient as possible, that we don't have very much time left. And so it's really about building community locally so that you can have your food and water and energy and security and all of these things and have the ability to sustain a more reasonable standard of living, but globally, because if we're all positioning into gold and silver, then guess what? We're going to have more of a say if we can come together. Look at the rise of the unions. Look at what happened in China with even the Chinese government changing their mind on the lockdowns because people came together and said no. So that is really what I'm working for, is to build help people build a local community, but actually build a global community so that we have more say in the next iteration after this mess. So LynetteZang.com, and quite honestly, I wasn't really anticipating having LynetteZang.com, but it's exactly what needed to happen so that I would have the freedom to talk about anything I want and actually to execute what I've been born to do. And for me right now, honestly, yes, you need gold and silver, but you need community because we've got to come together. And so what LynetteZang.com does, it supports community and sound money globally. And my goal is to develop a global community to say no to these CBDCs. I don't think we're going to get rid of them, but I want alternatives. And I want this next system to be more fair because this old system is not fair. It's not a fair system. It's not a level playing field.
Lynette, you're very much appreciated in the Kitco community. We always love hearing from you. So we're glad to be part of your bigger global community. And thank you as always for sharing your thoughts and your insights with us. Lynette Zang, appreciate it.
Thank you so much for